outlook and numbers have also disappointed both on the domestic and overseas business front. So that stock was also under pressure. Aside of that, I want to just take stock of the put call ratio yesterday. It fell to 0.75 vis-a-vis 0.83. Yesterday we had a new entrant, Manappuram Finance, in the F&O ban list, continues to be in ban today as well. Foreign investors, no respite coming in when it comes to the sell-off that we have seen. Foreign investors pulled out stocks or sold stocks worth 2,400 crore rupees in the cash markets, and domestic investors continue to be net buyers, 1,500 crore rupee worth of stocks bought in the cash market. To understand the texture of the market for today and for the coming sessions, let's bring on board Ajit Mishra, Senior VP Technical Research at Religare Broking. Ajit, lovely chatting with you. All the experts I have spoken to have pointed out that 23,300 will be a crucial level to watch out for, and the 20 DMA being placed at 23,303. Do you think we can defend that level today, given the fact that at least the global markets are, sending positive signals?
Yeah, good morning, Nandita. So, Nandita, in fact, if you've noticed that in the recent swing, it almost like 1,000 point kind of a rally that we saw in the Nifty index, means from 22,800 roughly January month low to 23,800 mark. And in that journey, we could manage to reclaim some of these critical areas, means the short-term averages, long-term averages. But again, in the last 4 trading session, we have lost, and the means the kind of ground that we have gained in the recent past, at least half of it we have again lost to the bears. I feel that the swing low post budget 23,200, that is more critical now, considering that if we fail to hold that area, then definitely there'll be a possibility that market may again slip towards the January month low around 22,800 mark. So for me, 23,200 is more critical. How we are placed as of now, so rate sensitives played critical role in the recent recovery, banking, auto, reality. But now we started seeing bit of a profit booking across the board. Only banking is still holding above a short-term average, so which is kind of a factor which is giving some comfort to the markets. But 49,600 will be the key area to watch out in the banking index also. If we fail to hold that, then possibly we can break this 23,200 mark and inch towards the previous swing low of 22,800. So as of now, rate sensitive, especially banking, holds the key. Alongside with that, IT looks comparatively better. So IT, like large cap IT name, is something that one should be focusing on.
Okay, banking looking better and large cap IT names, one should be focused on that. But, since you're talking about the Nifty Bank Index and how it has managed to stay afloat above that short-term average, one stock that stands out in particular is Kotak Mahindra Bank. I think it did hit a 52-week high as well, and it has been consistently outperforming. Your thoughts on where the stock is headed? Is it a fresh breakout? Do you see higher highs? What are your thoughts?
So it's been almost 2.5 years, almost 3 years, kind of a consolidation or a corrective tone that Kotak experienced, and now we have started seeing some decent traction post earnings. So the good part is that the kind of outperformance that we are seeing in the stock is not fading out with a decline in banking index. So means yesterday also it managed to gain nearly 1.5%, while the banking was on the back foot. So that clearly shows that the stock has potential to outperform from here on. The first area where the stock might take a breather could be close to around 1280, but I'm expecting that 2060, 2080 is something that the stock should test in the coming weeks. So as a trader, you should definitely look to accumulate the stock. You can buy at current levels also. 1,900 is the new base now, so that should be your stop loss.
Okay, 1900, the new base on Kotak Mahindra Bank, it can in fact go up to 2250 or thereabouts. That's the call on a Kotak Mahindra. What about metals? How would you really approach this pocket now that tariffs have been, increased by Trump? Of course, there are concerns over profitability and how margins will pan out going forward, etc. Anything that is catching your fancy, or would you say that one should steer clear of this pocket as of now?
So interestingly, in the last week, metal was among the best performing sectors, when it comes to the week on week
Yeah.
basis. But the way we have started the week means almost 3% kind of a cut. So that clearly shows that there could be a possibility of further consolidation before making a decisive attempt of further recovery towards 8800 mark in the Nifty Metal Index. As of now, I would rather wait and sit on the sidelines and see, because yesterday was the reaction to this news is anyways there, means we saw sharp cuts across the middle pack. So after the actual announcement, will there be further dent is something that we have to see. So obviously it's a wait and watch when it comes to the middle counters. And I won't recommend even going short at current levels, considering there's a possibility of a rebound after margin consolidation.
Okay, got your point. Ajit is not advising going short as well, because much of the reaction may have played out yesterday itself. But let's talk about some of the numbers, and we just have about a minute to go for the markets to open. Very quickly, what about Grasim? Reported numbers, it was an all-round miss. In fact, it reported a loss of 168 crore rupees vis-a-vis a profit of 236 crore rupees on a YY basis. Revenues were up 27% or thereabouts. Margins also saw a sharp contraction, 3.5% vis-a-vis 8% in the last year. How are you approaching this stock? It has given meager returns, but positive returns for the year 2025.
Yeah, that's true, and it's comparatively better if I compare with most of these, cement-related stocks. Uh, but yes, when it comes to the outperformance, obviously Ultratech definitely holds the key. Then we have stock like Star Cement, JK Cement, which are quoting closer to their record highs. I would rather suggest to avoid any fresh position until we reclaim 2550 mark in Grasim, because there is a possibility that we might again see a downtick in days to come.
Okay, that's the view on cement, particularly Grasim. But let's take a look at the markets. We have opened with a negative bias, defying the positive cues coming in from global peers. Yesterday as well, India was an underperformer, if you compare it with other Asian markets. 30 points down on the index, 23,350. We are holding on to that level by the skin of, in fact, the Nifty is holding on to that level by the skin of its teeth. Broader markets continue their downward move. It's a 0.5% cut on the Nifty mid cap index. The breadth is also tilted towards laggards, almost 1:2. That's the NSE advanced decline ratio. But let's take a look at what the other sectors are doing. If at all the metal pack has managed to stage any kind of a comeback. No, not really. It is down somewhere around 0.7%. So further weakness on metals. FMCG and IT, these are the two pockets that are holding out. So is the pharma pack and the PSU banking lot. Realty trading with marginal cuts. Oil and gas is doing well, 0.3% higher. But of course, metals taking the lead when it comes to laggards as of now. You have Bank Nifty as well, 49,800. It's holding on to that level. Autos under pressure. So is the private banking pack. So yes, I mean, sectorally it is a mixed bag, but metals are continuing their downward move. In terms of individual movers, want to see what Eicher Motors is doing. It's the top Nifty laggard. The numbers have missed expectations. We'll take stock of that stock in a bit. Apollo Hospital is the other one. Numbers were in line with expectations, but the stock is among the top Nifty laggards right now. Tata Motors is the other one. Power Grid, that's also under pressure. SBI Life, Bajaj Auto, HDFC Bank, BPCL, Coal India, Sun Pharma, these are some of the other names that are under pressure. M&M as well, extending its losses. But Grasim is the top Nifty gainer, 2% up, followed by Adani Enterprises. Hindalco also in focus. Novelis reported weak set of numbers, but said that margins could be better in the fourth quarter. So Hindalco is trading in the green. ITC among gainers, Infosys, Tata Consumer, Bajaj Finance, and Hindustan Unilever. These are some of the other gainers. Coming to you, Ajit. First of all, looking at the texture of the market, what are your recommendations for our viewers? With a 2 to 3 day perspective or even a slightly higher time horizon?
Right. So, Ananta, despite the negativity or profit taking that we are seeing in the market, there are certain pockets, especially in the large cap and larger mid cap space, wherein we are seeing consistency in the trend, especially post earnings. So, Bharti Airtel is one name, wherein we have seen, the stock has spent a decent amount of, under consolidation for almost 2.5 months. And then post earnings, we are seeing this gradual recovery or a rebound. The stock is gradually inching towards record high. So I believe that with stop at 1650, one can wait for a newer high, means 1750, 1780 levels in Bharti Airtel. But at the same time, since the tone is negative, one should maintain few shorts also. So Coal India from the energy basket, it was trading in a very tight range, and off late there are indications that there will be a further down legs to this overall corrective tone. So probably we can retest 350, 355 levels in the near future. So here one can create shorts with 374 as a stop loss.
Okay, that's the view on what stocks you can really look at the current juncture. Bharti Airtel and Coal India. These are some of the recommendations. But let's talk about Nalco. Hindalco and Nalco, both of them are gaining. Of course, the triggers are slightly different. For Nalco, at least, numbers have been extremely good. Both profit and EBITDA have seen multifold jump. Net profit has come in excess of 1500 crore rupees vis-a-vis 470 crore rupees in the same quarter a year ago. Revenues have grown almost 40%. Margins 49.9% vis-a-vis 23.1. Margins have literally doubled for Nalco. Just see the stock performance. Last 1 month as well, it has given positive returns. Last 6 months, you've seen a 13% kind of a return. And it's just under that 200 mark. Would you see the stock staging a good up move here on? Maybe 220, 230 kind of levels?
So yes, what the good part is that the stock has been outperforming within the metal space. Means despite the overall profit-taking trend that we experienced in metal, Nalco continued to hold its long-term averages. So that clearly shows that buyers are still trying to defend the area, the zone close around 190.95 area, and currently we are quoting around the same. So momentum is missing. There's one part, but tone is positive. So if you have any existing position, definitely you can stay put. But since we are seeing pessimism or negativity in the metal pack overall, there could be further consolidation or sideways move that might continue. So it's basically a time to accumulate Nalco instead of creating aggressive longs from the trading point of view. So this 190, 200 is your accumulation zone, and eventually once we surpass this hurdle of 200, 205, then probably 220, 230, the area that you are mentioning, definitely Nalco can achieve.
Sure, that's the view on Nalco. But another stock that's catching my attention right now is Apollo Hospital. Despite inline set of numbers, we're seeing a 3.5% cut, and the stock has not had a very linear kind of a move. If you look at the last 3-month performance, even on a YTD basis, it has lost quite a bit, 12% downtick. 6,500. As of now, it's holding on to that level. Do you expect lower levels? Perhaps even as low as 6,000, because it's not had a very comfortable ride.
True. In fact, Nanta, it's clear sign of distribution that the stock has experienced in the last 4-5 months, and today's break from this very tight range around the long-term averages. So that clearly indicates a possibility of further dent. So there could be intermediate bidder around 63, 63.50 area. But eventually 60-50 is something that we have the next major support. So yes, if you are planning any short trades, definitely you can do that with 66.50 as a stop loss in this position, with 63.50 and then 60.50 as a positional target.
Okay, those are the levels to watch out for on Apollo Hospital. Second top gainer on the index as we speak, and this despite steady set of numbers. But let's shift focus to some of the queries then. In fact, since we were talking about the pharma space, I can see a query on Biocon from Anil. Any thoughts on Biocon, Ajit? I'm just looking at what the stock is doing. It's last 5 sessions it has seen some bit of a loss. Any levels that you would be watching out for here in particular? It's somewhere around 373, not very far from its 52-week highs.
Yeah, that's true. In fact, we were seeing outperformance, and with metals, pharma was also among the gainers last week. It's just that we are seeing profit taking across the board, and that's the reason why we are seeing a decline from the previous swing high in Biocon as well. But the volumes are dry, means on the down days, which is anyways a positive sign. So definitely you can stay put. You can buy fresh with 360 as your stop loss. Gradually, it can again inch towards 400 mark. So the risk reward is favorable at current levels. You can start accumulating.
Okay, risk reward looking favorable for a Biocon. I hope that answers your query, Anil. But before I move on to the next query, I want to getting your thoughts on escorts. Reeling under pressure after numbers, almost I think 5% down on this stock. Both net profit and revenue have grown somewhere around 8.5%. Margins have shrunk 11.5% almost vis-a-vis 12% on a YY basis. The stock has been stuck in a downtrend. Ajit, any time horizon, you see it has given negative returns. Is it a shorting candidate now at 3,150?
So fresh shorting, Nanta, I wouldn't recommend because we are closer to this, previous swing low close around this 3,100 mark, which formed in December 2024. So there could be a possibility that the stock might, consolidate a bit before making any meaningful directional move. So, but yes, if you have any existing shorts, you can stay put with intraday high as a target, as a stop loss, and 3,100 as a target zone. But broadly, I see this stock was among the top performers within the auto basket. So eventually around these area, I believe that the stock might spend some time, means time-wise correction. Price-wise is almost over. Time-wise correction we may see in the coming weeks or a month, and then eventually the stock might resume the uptrend. So as of now, avoid shorts for fresh shorts, but existing position for 3,100 you can stay put.
Okay, that's the view on escorts. Let's take up the next query then. Alex has sent in a query on Aster DM, and he wants to know how the trend really is shaping up for this particular stock. Last 1 month the stock has come under selling pressure, although it was doing well. If you look at the 3 and 6 month charts, do you see this as a trend reversal? As to how the company or stock has been doing over the long term, but recently it has come under pressure. So is this a trend reversal, or do you think it is likely to remain somewhat sideways here on?
So it's a normal profit taking because the stock has had exceptional run from 280 to 520, in less than 2-3 months. So after such a phenomenal surge and the outperformance within the sector, we usually see corrective tone, and that is what we are seeing the stock currently experiencing. So maybe close to around 430, 35 area is something that the stock might take a breather first, and then probably form some sign of reversal or something. As of now, yes, if you have any existing trading position, you should definitely liquidate because possibility of further decline is high. But at the same time, if somebody is looking to invest, then closer to around 430 area, they can start accumulating in a staggered manner.
Okay, that's about Aster DM. I hope that answers your query. But the next one coming in from Yogesh Kumar on Zomato. He wants your thoughts for the short term on this particular stock. I think he's holding it at 238. So Zomato, I mean, these quick commerce stocks, I mean, these are witnessing a fair bit of pressure, right, in the wake of increased competition. I mean, with Swiggy also in the fray, and how it has seen margin pressure in the wake of expansion when it comes to quick commerce. All these stocks are stuck in a downtrend. And here on Zomato, he's already making a loss. What would you suggest, at least for the short term?
So Nanda, if you'll compare it with Swiggy, definitely it's in a better, structure. And yes, the tone is negative. Means the attempt of recovery failed around this 240 area, and since then we are seeing that stock is gradually drifting lower. But this zone, 210, 220 is something that the stock spent some time, in the recent past before making any recovery attempt. So probably around 215 means the median of this range is something that might act as an immediate support. But since the tone is negative, I would recommend avoid, adding to your loss making position. If you have any existing position, you may reduce also, because it's likely to remain sideways to negative. Means is something that we do have a support, but probability of testing that support is high. So as of now, if you have any existing position, you should exit. Let the stock close above 240 mark decisively, then only you should re-enter. Otherwise, it will be more of like, time-wise consolidation that the stock might experience.
Okay, you heard him. Hope that answers your query and helps you navigate your position in Zomato. A couple of queries from the auto pack, auto parts, so to say. I'm spotting a query on RK Forgings. Kishore is holding some shares. He wants to know if he can add more at current price or exit. Not very enthusing when you look at the charts of RK Forgings. On a YTD basis itself, it has shaved off 24%. Is it a good time to, accumulate further, or would you mention a level where he could perhaps, cut some of his losses and exit very close to, or in fact hurtling towards 52-week lows of 602 or thereabouts, the stock?
That's true. And Nanta, in fact, while we saw a recovery or a rebound in the markets, mid cap and small cap is something that I still feel, in case if there'll be any correction in the market, the pressure could be more on the broader indices. And that is what we are seeing in most of the stocks also. So at least from the trading point of view, you should not average your loss making position, especially the small cap and mid cap names, because even if, let's say, market pauses and take a rebound again, there's a possibility that the small cap and mid cap might continue to underperform. So same hold true for RK Forge. After this, phenomenal surge, now we are seeing gradual drift in the stock. Means from 1000 to 700, we have already seen a correction, and probably around 600, 610 something that the stock might test in the coming weeks. So for the existing position, I would recommend to reduce. Do not add to your loss making position. Around 600, you have to reevaluate whether the stock manages to form some reversal pattern or not.
Okay, that was a view on RK Forgings, not advisable to average. But what about Bosch? We have a query coming in from Maheshwar Bhanu. He also wants to know the same thing. Can it be added now for the long term? Similar fate for Bosch as well, a 20% cut so far this year. Your thoughts, whether it should be bought at current levels?
So yes, I feel that you can start accumulating, because we are at a very critical juncture. Means the weekly average of 100 days plays around 27,300 mark. So we are testing that area in Bosch, and possibly that there could be first attempt of a rebound or a recovery from here before any meaningful decline from the current levels. So in this recovery, again, the stock might inch toward 3,000, 3,100 mark. But since his view is long term, he can start accumulating at current levels, means 50%, 40% current levels, and maintain till this, corrects, if it corrects till 24,000 mark. So around that area is something that I believe that the stock should bottom out, considering the multiple supports that we have on weekly and monthly charts.
Right, that's the view on Bosch. You can perhaps look at accumulating this one, but a couple of more queries then, Ajit, quite a few of them trickling in this morning. Interesting query coming in from Satya CK. He wants to know your short to medium term take on the construction industry. He's shared some of his holdings, NCC, HG Infra, EIL and HCC. He's saying that except HG, in other three stocks, he's currently at a loss ranging from 5 to 25%. He wants to know if he should hold or switch all three to HG, or is there something else that you are bullish on within the construction pack? Your thoughts.
So counters, they are definitely fundamentally strong names. So there's no point switching to one name or some other names. It's just that yes, there were challenges when it comes to the earnings, execution challenges, and basis that we are seeing correction across the board, especially in the infra pack. I feel that HG definitely is comparatively stronger, means based on the recent price action and otherwise also. But I feel that it's almost done with decline in NCC and the other name as well. So it's likely to means again that price wise correction is almost done. There could be some consolidation. So if your view is long term, you can in fact look to add to your position when it comes to the NCC around 190, 180 area and hold it for the long term.
Okay, that's the view. Satya, I hope that answers your query. The next query is coming in from Advait Joshi on Ola Electric. He wants to know your thoughts from a 1 to 2 year. His time horizon is 1 to 2 years. Any views within the two-wheeler pack? Would you look at Ola Electric now? Would you advise?
So Nita, the stock has had phenomenal run post listing, and since then we are seeing the stock is struggling for any meaningful recovery. Though we had a phase wherein the stock tried to reclaim, or in fact it reclaimed its meaningful moving averages also, but it couldn't sustain. And again, we are trading closer to 52-week low. So since it's a long-term investor, I feel that the focus should be more on the fundamentals, means how the company is progressing when it comes to the profitability and the other aspects which are more critical in the long term. As of now, I'm not seeing any signal whatsoever for any kind of respite or a reversal. So if let's say you're planning to add fresh, you can wait and see whether the company has announced the numbers or not and act accordingly.
Okay, Advait, I hope that answers your query. I spotted a query on Cummins India coming in from Suraj Shinde. Wants to know your thoughts, in fact, for the rest of the month on Cummins India. The stock has got upgrades after almost a 40% correction from its peak. The good news is that its parent, Cummins Inc., has given good guidance for the India business. Going forward, sees double-digit growth. So, would you suggest a positional, play, Cummins as a positional play right now?
So yes, Ananta, in fact, if you'll see that in the last 1.5 month, we are seeing that the stock is, started the consolidation in this range of 3,000 mark. We made an attempt of breakout also, but couldn't sustain. So again, it might spend some more time in this range of 3,000 mark. So it's a time basically where you can also accumulate until we break this mark, 2,700 mark decisively. So with that as a stop loss, you can definitely look to accumulate in the next leg of the up move. Once we break 3,000 mark, 3,200, 3,300, something that the stock might test. So yes, you can look to accumulate Cummins at current levels.
Okay, that's about Cummins. You can look at accumulating as well at current levels. But last query really, Viru Naidu wants to know your thoughts on some of these capital market stocks like CAMS, CDSL, K Fintech, BSE, etc. Which one is looking the most attractive to you now?
So BSE definitely wins this hands-on cause it didn't correct much, and that is the most important aspect, that when the markets are witnessing pressure, how your stock is performing. So it's showing definitely relatively higher strength, and in fact, there's a possibility that we may see a new high soon, considering that the stock is still holding our short-term averages. So it's a time basically where one can look to accumulate on every dip till 5,000 mark, with 6,000 as a positional target in a month or two.
Okay, BSC looking the most attractive. In fact, it is poised to hit fresh highs as well on the charts. With that, I would like to thank you for taking out time, Ajit, and joining in this morning and sharing your thoughts with us. Always a pleasure, and I look forward to more interactions in the future as well. Have a great day.
Same here, Nanda. Thank you. Thank you so much.
Thanks a lot. Well, with that.